This is a quick video I'm doing for Buy Sell Short, pretty much titled How to Trade an Uncertain Market, much like the market we have right now. Now, over the last 2 months, we've had a fantastic rally, especially in small cap stocks, essentially from Thanksgiving all the way up to this week. It's just been a fantastic run in small cap stocks. And every year, if you've been trading the small cap stocks or been with Buy Sell Short for a number of years, this happens almost every January into February. We get a fantastic run in the small cap stocks in January, and then late January into February, we essentially have a hangover on all those stocks that ran big retrace. Right now, we've got a little wrinkle in the market. We've got all the tensions and bearish news coming out of Egypt and the Middle East, and the market hates when stuff happens in the Middle East, and traders react with one thing: they sell. And whenever the market is in a bearish mode, small caps get hit more than anything else, because whenever the market is in bullish mode, small caps have a bigger move up. Now, our plan has always been to raise our cash levels going into the end of January and early February. That's what we do every single year. This year is no different. Now, the reason I'm doing this video, one of the biggest issues traders have is selling for a loss or holding on to the hope of a stock. I don't want to sell ABC because ABC's got this great news that's coming, and if I sell it now, the stock's going to run and I'm going to miss that potential profit. And that kind of mindset is essentially what makes 9 out of 10 traders lose in the market. The difference between a winning trader and a losing trader usually comes down to one simple thing. A winning trader has no problem taking losses and has no problem rebuying those stocks when they get attractive and rebuying them higher. Losing traders essentially trade on the strategy of hold and hope. I'm going to hold and hope I make profits. That is not the buy sell short way. Earlier this week, we went high cash, and I thought I'd just do this quick video for you guys just to tell you essentially, how I trade this market and how I've traded markets like this. Markets like this occur 3-4 times a year, every single year. This is not, if you're a new trader, you're going to get used to this kind of market happening, especially after we have manias like we've seen over the month of January in small cap stocks. Now, here we have a quick little Excel spreadsheet. I'm going to use the doubler account as an example. The doubler account is something we set up to, show you guys how small accounts can do very well in this market if you stick to specific trading strategies and trading rules. January 1st, we started the doubler account at 35K. It's been a fantastic month, as it is every January. It's right now up 49%. All we need is a $275 gain tomorrow to make this a 50% gainer in January. Aside from that, though, one of the strategies I hammer home, and I'll jump into it more whenever we release our trading DVD and book, is how what cash position stance I'm in at all time. Rarely do I go above 50% long in the market. Doesn't matter the size of my account. Even when I had a very, very small trading account, I was always 50% cash. A big mistake a lot of new traders make is they're all in. I've only got a 20K account. How am I going to get to 100K? I've got to invest all my money in the market. And what happens to traders is, new traders and traders without trading plans, is they will have had a fantastic January, and then in the 1 or 2 week retrace that happens in the market, they give back 50, 75%, or all of the gains they made because they're sticking in stocks or they're all invested in the market. As I mentioned, you can see here, 50% is what I want to be cash at all times. Even in really good markets, there were a couple of times January is an exception to the rule where I'll go a higher long position just because of the way the market is acting. But I always like to be 50% minimum cash, even in the best of times. Now, the cash position, whenever we get into a bad market or an iffy market, which is what we're sitting at right now, I move to 75, 90% plus cash in my accounts. Now, that's an overnight cash position. That doesn't mean I'm not going to be trading intraday. That means when I go home at night, I want to sleep at night. I don't want to worry about, waking up Monday morning and, 5 countries in the Middle East have gone to war because of what's happened, and we see a huge gap down in the market. Uncertain times, high cash. Now, a big problem you'll have is small traders are sitting on a bunch of little positions. I'm not going to sell it. It's at a loss. I don't want to be, taking a trade for a loss because when the market bounce backs, I'm going to lose. Traders that are successful, they don't care. Or Friday, when the market was selling off and we jumped on, or the loss ended up going above 100, which is the first time we've seen real fear in this market since really November when we saw that last sell-off. In the chat room, I was saying raise cash, get to a level that makes you comfortable. You want to be at a level where when you see a stock sell off, you've got a high enough cash position that you're actually able to jump in and benefit from that sell-off. Typically what happens is you've got a trader who's low cash, writing a lot of stocks, everything's dropping. He sees a really stupid trade like, let's take PRKR for an example. On Friday, we had PRKR drop to as low as 47 cents. Now, if you were high invested in the market, that was a scary trade for you to jump into. But if you're high cash, you jumped in. By the end of the day, you made a 15% return on that money. And that's what you want to be looking at. Now, another thing I wanted to go into real quick, when the market was really active, let's say a week ago, even on my doubler account, we were at $50,000 in the doubler account. The most I would have gone home overnight was $33,000. That would be a level in the, a goal I would have going into the last hour. I would look at my account and I would go, okay, I've got $40,000 worth of stock. I do not want to be $40,000 long overnight. My target is $33,000. What do? I look at what stocks I have gains, what stocks I feel uncomfortable with, and I sell to get to that cash stance. Now, as I mentioned in the chat room, whenever we get into iffy markets, exactly like we are right now, you modify your strategy. And right now, the strategy, aside from the fact that, we've got the turmoil going on in the Mideast, right now, my long overnight would be $20,000. That is the most I would want to take home overnight for my account right now. Granted, we're a lot higher right now, but even in a normal market, January is a little bit of a blip. You'll go higher cash just because of how small caps act. Back to a normal market. Right now, things are iffy. There's not a whole lot of charts we want to buy or attractively priced stocks. So $20,000 is where I would be. Now, 2 weeks from now, when the market starts to rebound and we start to see things pick up and a bullish sentiment come back into the market, I would reevaluate what I'm going to take home overnight and, adjust it accordingly. Oftentimes, you have traders 75, 100% long all the time, every market. That is not how you become successful in this trading business. Oftentimes in a really bad market, you have, especially after manias, like I've said, a big mistake traders make is not stepping back and seeing what the market is doing. You're still trying to make money. You're watching chat rooms, you're watching message boards, you're seeing traders bank money on shorting stuff, and that's not your kind of trading market. Right now in this market, I like going high cash. Well, actually, let's see if we can pull up a chart here. The Dow chart. As I mentioned in the video today, we could see, 500 points or more downside in the market. It was really hard to find trades recently, and, I have no problem going into a high cash stance, shorting decent setups, and then waiting for the trades to come to me. Waiting, for stocks like NEI, which, we find very attractive. The lower this goes, the faster it goes, the bigger the bounce back is going to be. And then I want to be the one who is in a position, who is high cash, who's able to jump in, buy these beaten down moves, and then sell the inevitable bounce back that will happen on all of these stocks. It's called trading with a plan. Another tip I will use, especially in a market like this, is adjusting my position sizes. And I mentioned that briefly in the chat room on Friday. Right now, when we would jump into these stock plays, if they make themselves apparent over the next couple of days, last week I might have bought 5,000 shares of NEI for a bounce back. This week, because it's an uncertain market, I adjust my position sizes. This week I might buy half positions, and that's typically what I will do in an iffy kind of market. Iffy market, reduce the position sizes to half positions. That way, if you're wrong, and you will be wrong when you're trying to time bottoms in some of this, the damage is not as bad to your account because you're playing half positions. You're not going in, a full position. You've adjusted your trading plan for the market. And it comes back to that simple theme: have a trading plan. Many, many traders don't have trading plans, and you've got many, many traders who've done very, very well over the last 3 weeks who will give it all back sitting on loser plays. We had a few plays over the last few days we jumped into. Market has gotten iffy. Small caps, whenever the market moves to the downside, small caps have more of a downside move. That's just like they have more of an upside move. When the market gets iffy, you go high, high cash. You keep your stops tight. If it's a loss, it's a loss. So what? Your most important asset is your trading portfolio, your cash. If you don't have cash, you can't make money. So you've got to do everything you can to protect your cash in so-so markets like we have right now. Also, with having trading plans, our trading plan for the entire month was to get cautious going into the end of February or the end of January. And the reason was, look at what happened last year. Last year we had the market top into January and then sell off to the middle of February and then have a huge rally of 40% over the next 2 months. Okay, this happened last year. So right now we're selling off. We've got the Mideast crisis as our excuse. We sit back. Downside targets, we could see the the Russell get down to 740, or even lower, get a 5% move. But, we know sitting on high cash that we're going to be able to buy this sell-off. And the fact that trades are hard to find, let them tank it. We'll play the occasional short. We'll let the shorts have their fun and then back into bull buy mode whenever the market tells us it's time to do that. So hopefully you guys found that little tutorial helpful. If you've got any questions on it, feel free to send me an email or ask me any questions in the chat room. And that's it. I'll see you guys later.